Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. Good, good. Welcome, welcome. Good morning, good morning. Microphone check, all that fun stuff. Good morning, SSFTG family. How's it going? I hope you all had a chance to rest up and get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to go through and understand everything that is inside there. Also, just a quick note for you all before we jump on in today, if you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Yeah, Shiba's gone absolutely friggin' crazy. Just another 13% today, whatever. Oh yeah, I'm waking up in a pretty good mood today, I gotta say, Steven. I'm in a pretty good spot right now as far as you know, don't get me wrong, I mean Shiba has been a fantastic mover, but you know, there's not much better than waking up to like 15-20% more, you know. It's just really nice icing on the cake. What a move. Anyway, I just want to take a second like we do every day to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, there are a ton of different ways to join the SSFTG fam with us. The easiest way is as a YouTube member with the join button below the stream. It gets you in the chat room and in the YouTube community boards for stocks and charts, which I have to update. There haven't really been very many setups lately, but I've got a couple of them in mind. Anyway, and a bit more behind the scenes and kind of what's going on. Of course, if you want to understand how we do everything, check out the Day Trading Academy along with everything else that we have to offer over at SSFTG. Oh my god, Ben. Shiba to 1 cent? Time to friggin' retire. Peace. Just buy an island in the Caymans. I'm out. Oh, man. So if you're here for the first time or the 1,000th, good morning and welcome. I hope you're all ready to rock and roll alongside me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts. Let's get this thing rocking and rolling. Don't forget to grab your morning DP levels as I posted for you on the major 7 markets that we trade. NASDAQ, S&P, Gold, Crude, Zero, Bitcoin, and Ethereum. Man, I only made it one day before tripping up again. I got to get some tighter shoelaces. Anyway, we also have the news calendar, and really it's, I know it looks like there's a lot, but a lot of that happened at 8:30. We do have the exports and imports and all that stuff at 8:30, but later on this morning, 9:45 has the market composite PMI for September. Forecast is 54.5. They also have the services PMI, which is 54.4 in the forecast. 10 o'clock is the first big and only big news announcement that we have today. ISM non-manufacturing PMIs for September forecasted is 60. Hey, a few million Shiba right now, if that were to go to a penny, like literally you're taking $20 and turning it into 200,000. You know? Like, it doesn't take much if you're talking it going to 1 cent. Obviously, that would absolutely just mangle any market cap that the market has right now. But, you know, a couple of years from now, that's a possibility. You get enough FOMO going. I mean, we've been talking about the power of the people. Look at GameStop. Look at AMC. Look at all these other ones. We're taking the power back, baby. Well, until they buy it all in the dip because everybody panic sells to JP and then they own the crypto market too, and then we'll have to find something else. But whatever, that's a future problem for future John. Anyway, looking across the board, we don't really have a whole lot else going on, so let's jump into some charts here. The overall picture that we've got going on here, I mean, obviously the market has been trending down for quite a while, and it's been trending down for, well, I mean, more than just this last leg down. I mean, if we zoom out, we've got to go to like a 60-minute chart. But if we go to a 60-minute chart, okay, how about a 60-minute chart on 180 days? Is that going to give me enough? There we go. Let's go to a 240-minute too. Sheesh. I know it's really hard to see with all the vertical lines and all that, but still, I mean, realistically, we're looking at this area. Actually, I got to turn those lines off. Everybody's screens are going to have a freaking, they're just going to blow up. Yeah. Let's try that again. The overall corrective phase that we're seeing right now is logically something that we've been waiting for a very long time. And what's interesting is if you line these two previous lows up, they line up almost beautifully for a possible channel low. The channel high is questionable because they broke above the highs, and that would suggest that a break through the bottom would be next. But if we're looking at the overall cycle from the bigger perspective, right, measuring from the top all the way down to the bottom, swap this over 2%, and then we'll move this over here and measure the last largest pullback before that, the last largest pullback before that, and then the last larger pullback over here. Now, you'll notice something very common when it comes to the NASDAQ. When it pulls back about 8%, it tends to like to find a bottom. When it's in a really strong trend, when it pulls back about 3 or 4%, 2.8, whatever, 3 to 4% or so, it finds a nice little short-term bottom to continue. Right now, we're at 8.5%. If we're looking at it from a structural side of things, we are at the base of the major spike in channel. The major spike in channel was kind of gross looking, but to be fair, it was definitely there. And this is the spot where bulls are going to be looking to come back in again. If we look at this move higher from the lows and kind of progress forward, we've got the L5, which dipped into the L2 perfectly, continued up into an L1, went into an L1, then things went crazy. We've got the next L1, into another L1, into another L1, into another L1. So when the market finally starts pulling back, the first thought process of every bull on the planet is to buy the L2. Which, I mean, don't get me wrong, it worked out really nice, but we didn't get the rotation up to a new high. So with that lack of rotation to a new high, we're starting to dig down a little bit deeper, and the L3 would be the next one. That's kind of like, I mean, that's the last ditch. There's not much left. If they start cracking lower underneath this, then we're expanding outside of a normal with trend value pullback, of about 8%. Then we're probably looking to double this. And you're looking at about 16%. And 16% would put us at around 13,100. So a lot of traders really want to see that bottom show up sooner than later, that's for sure. Over on the S&P is just kind of churning around, chopping, slopping, not really doing a whole lot of anything. But we are still, once again, just like the NASDAQ, perpetually working our way lower on this cycle down. Now, the overall move down that we have had has been lackluster at best through the lows. The NASDAQ's been obliterating the bottom, but the S&P is just not showing up to that party. I mean, they're getting really strong moves down, but even yesterday, when the NASDAQ was just blasting through the floor, the S&P couldn't even break a new low. So, I mean, it's not to say that the S&P can't play catch-up, but there's a lot of support, and we were talking about that yesterday from the larger perspective, that's trying to prop the market up. If they lose their grip, then it's kind of game over. We'll see. Over on gold, we haven't had the reversal above that previous major swing as of yet, but as far as a continuation phase to the upside goes, we've got the overall volume cluster, which is hanging out at 1758.4, and the market's losing that ground right now. That's a problem. If traders are looking for a continuation to the downside, let's see, what about off of here down to, let's go down to the low. Only a 15-minute chart. I didn't think it'd take that long. Okay. Anyway, we've got that larger POC, which is back at 1752.2. So look at the interplay that's going on right now, right? This major POC, this is from the top all the way to the top down to the bottom. So my first assumption would be, well, wait a minute. If they're aggressively bouncing here, then, well, if that's where the POC is, I have to assume that those are probably buyers, right? At least initially. When they start working their way through, they get a little bit nervous, maybe lighten the load, maybe buy a bit more on the dip, lighten the load, buy more on the dip. But it never ended up crashing lower. I mean, it did pull down pretty hard, but it's not like it blew off the low of any structure. It didn't come driving down. In fact, they had a little inside higher low retest and a continuation back up. And if we use that as our break-even point, then the bulls are defending it again. So, I mean, this is the spot right now. We've got the short-term seller's POC, which is hovering at 1758.4, and the long-term POC, which is at 52.2. Man, talk about a spot you don't want to be inside of. Hey, guess where we are? Yeah, it might be better to just kind of hang out and not do anything on gold today. Yikes. And then there's crude oil. You know, yesterday we were joking about the $80 mark. It's not a joke anymore. $80 mark is right around the corner. We're poking into the 79s. As insane as that is. If we're looking at the last pullback, the major pullback took several days, but we have broken to a new high. And after that break to a new high, that allows a confirmed POC, which is back at 75 even. So, as far as the last confirmed POC at 75, even if we take the structure from the bottom to the top on the last bullish successful swing, we can see that their POC stacked at 73.30. And if we look at the overall interplay of how they wanted to mess around inside of here, we had a nice little rally up. They built a POC at 73.30. They did all of that right here, mind you. Very small span of time for them to build a POC and then go screaming higher. So likely, psychologically, what's going on here? Shorts got steamrolled. It got absolutely obliterated. Why do I say shorts? Increasing volume. Increasing volume doesn't mean that it can't be bulls taking profit, but it's impossible to gain position size while exiting for profit. That doesn't work that way. That's not how it works. That's not math. If you can figure out how that works, let me know, please, because there's a lot of positions that I would love to add to without actually having to do anything. That'd be great. So when the market finally came back, where did it come back to? It allowed the shorts out. They got nervous too right there. It jumped ship a little bit early, but it finally rotated off of 73.30. It poked its head down to 73.14. It went through it by 16 cents. Since then, it's gone up about $7. So, or 6. You know, I mean, just a casual little bounce there. Now, as far as the continuation phase goes, we know that they had a really strong rally up. Sellers likely tried to gain their continuation down, lost their grip, alligator's mouth shuts, clamps it, rips their arms off, and now we're back up to the highs again. What a move. So, if we progress this forward now, knowing that that is a confirmed low, and we can take this all the way up to the swing high now, since nothing's changed, that gives us a POC that was left back at 75.20. Now, in the current context, I have to assume that those were longs, right? And this POC that's building up here is probably them taking profit, especially considering that that's a confirmed POC and that was successfully motivated to the upside. 75.20 is where the longs are at least in the short term. As far as the euro is concerned, it's trying to roll its way back down to the lows, although, man, this thing is just grindy. Did they get a new low? I think that's a double bottom. Jeez. We'll go double bottom up to the top, and then we'll take this vindictive trap all the way down to the lows. Okay. So the sellers are possibly or very likely short from the 1.17340s as the market's continuing down. We're seeing them creep in with some profit taking around this the 16,130 area. But from the downside, measuring from the lows to the top, we go up, we build the POC. The shorts are trying to get this to continue down. They get dunked. We're back to their break-even point. It does look like they may have had some break-even exits there, but now we're starting to rotate through. If we can stay under, this is their shot to take it back to the lows. Bitcoin's still rolling its way up. Not really doing much. We are back in the 50,000s again. That's big. That's really big to be back in the 50Ks on Bitcoin. Ethereum, finally rolling up above the back towards the highs, but still totally different viewpoint than what we have on Bitcoin. Bitcoin's got new major swings. Ethereum's still hanging back. So it's taking its sweet time, that's for sure. Anyway, looking at the start of the day and kind of kicking things off from the morning side, at least, we can see that the NASDAQ really didn't... Man, the NASDAQ got absolutely obliterated to the downside, and when it came to try following through, they couldn't get the job done. And they have perpetually been failing to get the job done with this continuation to the upside. They're getting pinched a little bit, ascending wedge style. Maybe a nice little break retest, but we're so far away from the crux of this. I mean, it's a mile and a half away. Looking at what's been going on for just today, we kind of started off with a casual grind to a new low, up to a new high, higher low, continued back up, but now we're seeing a lower high and they're starting to break down. They've got some issues. Looking at it from a cycle perspective, just to see where we're at from the bigger picture, we've got an L3 with a continuation down. Usually after an L3, you Academy students, you know what you're looking for. Followed through perfectly. Now we're back to where? Really nice area of interest back in the L2s here, seeing if the sellers want to show up. Obviously, they've got some issues with the POC, though. S&P is a bit more bullish. Still totally unable to get anything done down there. See what they can do. Get that a little smaller so I can see what the heck's going on. Perfect. Market's still just kind of grinding around, not really doing a whole lot of anything. We got 11 minutes until the open. Oh, man. Kind of slow going into the open. Not a whole lot going on, but in the nearer cycle, at least, just looking at today, of course, not looking at anything before that, but we started off the day on the S&P with an L4. Oof, barely. But they already had the L1 progression. We've got a follow-through L1. Trying to get a third. Came real close to the L2. As far as the euro is concerned, we are getting that nice little breakdown move. What a mess. Oh, great. Cool. Yeah, that's totally what the volume's supposed to look like. Good job. Freaking NinjaTrader. And here it goes, just chopping around. Not a whole lot happening here. 9 minutes until the open. I'll be right back. Give me 2 seconds and we'll get a refresh of the drink. And maybe find some extra caffeine or something. Sheesh. BRB. All right, there we go. Sorry about that. All right, all right. Hey Maurice, how's it going? I honestly I don't know. They're the same as they have been. I haven't changed them. NinjaTrader for whatever reason messes up sometimes, and I'm too deep into the morning to want to restart for moving averages, just because I don't really use them too much. But I don't know what the heck. I think it has to do with the logarithmic or linear scaling, and it just throws them all off, and they look funky. I haven't changed anything. So, but what's weird is, like, if I go in, let me go in. So right now I'm using my default template, and we were doing that. We had this last week too, where the default and the default. You can see I saved another one, default fast and default. There's something different, even though they're the exact same. There's something different between these two, where it shows up properly. They're the exact same, but they show up different. I have no idea. So every time whenever they mess up, I just reload this one instead. I don't know. I mean, it's the same freaking thing. Whatever. Sold half of your sheep for 80% gain. Nice job. Well, I appreciate the kind words. Thank you. But I didn't pull the trigger. You did. Pat yourself on the back, too. Good job. That's a heck of a move. Absolute beaut. Oh, that's fantastic. Shiba, Shiba, Shiba. Good morning, everybody, so far. Bram, Ace, Maurice, Ben, Vicky. How do you scan crypto? So one of the easiest ways to scan crypto, first off, you got to figure out, like, what markets should I be looking at first, right? Like, what ones are even moving? The easiest way to do that is to use coinmarketcap.com. Here, I'll post it in. But CoinMarketCap is going to tell you by market cap which ones are moving the largest. So, like, this one is an example. These are the top 10 by market cap, meaning these are the top 10 most valuable coins. This doesn't necessarily show you which ones are moving, but if you click this 24-hour percent button, you can see Shiba is on there at the top of the list. Over the last 7 days, up 125%. So if you're trying to find movers, that's what you do, right? Now, let's say, as an example, I want to figure out, where do I trade this, right? Okay, Shiba's moving. Grats. You know, like, now what? So what you can do is click on it and go into the market right here. And this will tell you where it's trading. So here, from the top to the bottom is where it's traded the most. The majority of the volume is coming from Binance, by almost 3 times as much. The next one is Coinbase Exchange. Then the next one after that is Binance again. It's just BUSD instead of USDT. The next one after that, excluding Binance again, would be Huobi and then Qcoin. So if I wanted to trade that, then I would go to Binance first, and if I didn't like it there, or I'd then go to the next, you know, whatever. But that tells you where it's trading, or at least the most volume. Now, it doesn't necessarily mean that other ones aren't on there. Like right here, Crypto.com Exchange, this is where I buy a lot of mine, along with Webull, because you can buy it on Webull. And so, I mean, there's a lot of different ways to do it. But that's how I scan crypto. I just see what's moving, see what's going on, and then go from there. Obviously, I'm not scanning for the ones that are at their highs. That doesn't make any sense for my kind of trading. That's more like CNBC style, buy high, sell low. Ask them how that Ripple trade went a couple years ago. Bought in the 650s, sold at 1100s. Nice job. I need to go read the history of Shiba and how it was created as a... Yeah, Shiba's going, again, it's back up into the 15s. It hasn't stopped. Unsane. That's how crazy it is. It's insane. We've got 30 seconds until the open. There's not really much going on, I gotta say. The markets are kind of slow. All eyes are on crypto, I guess. Yeah, Elon adopted another dog, exactly. Gold is catching a bit more to the downside, and this continuation lower is, I mean, it's starting to look pretty nice. Remember, the bigger picture in gold has obviously been a little bit weird because they're trying to get that transitional phase to the upside. So if the bears are going to take over, this is kind of the shot that they need to do it on. The problem is they're sitting directly on top of support. So, man, I mean, if they're going to get it going, it's got to be low probability, high reward type trade. Nothing else really fits. So I don't mind the trade on gold, but I'm going to keep it on the lighter side and look for a 3-to-1. Maybe even a 2-to-1. Depends on, I mean, I'm definitely looking for a positive RR here. I'm not looking for any type of scalp on this at all. The probability just doesn't suggest that that's good enough. Nice little trap underneath the lows at 9:31, a little bit after the open. NASDAQ waking up as though the open were just hitting. It's kind of woken up now, I guess. It's like they're not sure. And here it sits. Okay. A little bit slower, but it's all good. Might be able to zoom in a little closer here on the NASDAQ just to find some nearer term, more aggressive opportunities. But that's really about it. For now, at least. The bigger perspective, honestly, the NASDAQ feels like this could very quickly turn into a bear flag. There's some obvious concerns that I feel like we have to have here from a 15-minute perspective. And the S&P just looks like it's strapped the nitrous on. Could be looking to widen out. Either way. Gold's pulling up, but not quite far enough. Alright, gold's getting closer. Just waiting. This first candle on the index market's not it's not looking so hot. Sheesh. That's a toughie. Especially when you zoom out just even a little bit. It starts getting real challenging. If we can get a little bit of an extra slide down to like the low 500s, I think it'd be more beneficial. That's a big wick on the top to be messing with. But the S&P is staying relatively strong and trying to pop it back. Crude oil pressuring back up towards the highs there as well. That last bar ended as a doji. Crap. I don't know if that happens. I don't know which candle that happened on. Hang on. Okay. That obviously didn't happen up there, so let's go backward a little bit. That did happen up there. Wow. Okay. All in one big move, huh? So the first 5-minute POC on the S&P 4310, on the NASDAQ 558. Pretty wild one up there. What do you think is next for SHIB? I mean, we've got to be realistic, right? This kind of move isn't something that is necessarily going to stick around. But that said, right, we've been talking about potential from a much larger scale than just an hourly. Look at what's happening here. I mean, this has a potential to go another 5 times higher. And that's just to the top. You know, I mean, you start pumping everything else and you get things going. I mean, you're going to have people paying attention. This, especially when you have these meme coins like this. Not to say that it can't pull back, but if we look at the volume from the bottom to the top so far, the majority of the volume was traded back in the 720s. Hang on one second. NASDAQ dipping down into a zone of interest. I hit the bid like 3 or 4 times. I didn't get a single one of them. Oh, I got one. Scalping. Okay. I got the one. Man, I tried hitting the bid on the NASDAQ on that slide down to the 502s. It happened real fast. Let's see if they can give something a little bit more, a little nicer. I only got one out of that. Anyway, back in the 720s is where the majority of that SHIB has been traded, so until that POC changes, I have to assume the longs are still long from there. There we go. S&P now is the one that is kind of standing out in open ground here. Well, the NASDAQ's catching up. Ooh, man, things could get interesting here. Nice pokey little trap down here. Let's see how they want to hang out. Looking for this pullback for the longs to try to pick back in. Really nice zone of interest, and if the bulls can catch a little bit more of a pop through those 520s, it's game over. Beautiful continuation back up in the short term. Come on, NASDAQ, pump it. Go, 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 go. Beautiful lift. Sellers are stuck. How stuck are they? Are they running? Are they running? No, it doesn't look like they're running. All right. Oh, nope, there they go. Oh, crap. Right after I exited, of course. All right, fine. I bailed right ahead of the end of the candle because it looked like they were going to start dipping back, and I didn't want to give any of that trade back. But I'm not looking for swings, so I'm okay with, 40, 50, 60 for a scalp. Now, they are starting to gain a little bit more pressure, and that last bear bar is going to put a lot of traders on in a sort of awkward position. Like, wait a minute, what just happened? That was a really strong bull bar, then it was a really strong bear bar, and now one side's trapped, and we haven't really seen who yet, although we're getting clues. As far as the NASDAQ is concerned, pullbacks, I mean, anywhere down in like the 17s or 18s, I suppose, would be of interest, but we're kind of retesting those previous swing highs. It's a troublesome area. It's a very difficult spot for the NASDAQ. Gold getting close, but no fill. Retesting the 550 POC. Well, not retesting, kind of formulating a new POC at 550, but the original 5-minute was at 58. The S&P hasn't changed off of its first 5-minute. On crude oil so far, I mean, the POC is probably going to be at the bottom, right? Wow. Okay. 78.50 is the POC on crude. I was really expecting it to be lower. All right. Here it sits again. Nice-ish pullback on the NASDAQ. I don't know, man. The S&P is starting to give me some bad vibes here. That was a really close rejection at 43.10. You still have 2 minutes left, I guess. A lot can change. Crude oil longs look like they're still trying to pulse this higher, and shorts, if anything, are just incredibly stuck. And it's not getting any better for them either. Look at all these wicks on the bottom. They're just screaming for help. It's really far up here to be a buyer on crude. As far as the risk goes versus the reward, it's definitely scalp distances up here, but still. The shorts are begging for mercy right now. zoom back in a little closer here so we can see what's going on. NASDAQ bulls are trying to cling on to this, but they're holding off of that POC at the 50s, and the S&P isn't helping it. That thing's like just a weight hanging on its foot. Still not really a whole lot going on gold. It came close and then it kind of backed off again. How are we looking on the RTH? Sheesh. We've got some issues here. A lot of volatility coming in at 9:45. Next news announcement's 10 o'clock. Little inside bar on the last 5 minute on the NASDAQ. For the S&P, inside bear bar. A little bit of a different perspective. Gold, man! Is what you're looking for right now your main screen? How big is it? So the main screen that you're looking at right now, this is a 27-inch. And this is the one that I use in the room. This is the one that is like my projection screen. My trading computer, I try to keep my trading computer as minimal as possible. I mean, don't get me wrong. I've been there. I've had the 6 monitors, the 8. I've gone down that road. The problem, at least for me, and maybe you guys are different, but when I started adding monitors, I started adding charts. And when I started adding charts, I started adding indicators. When I started adding indicators, I started going down a rabbit hole that caused a lot of problems, and it becomes expensive because you go down a rabbit hole that you don't know, right? You're doing, so it pushes me at least out of my realm of comfort, and it causes a domino effect that doesn't get better. So for me, I keep it to like 2 monitors now because I know that if I don't, I'm just going to blow it up. So I force myself to trade on smaller screens because I know how my brain works. It's more of a safety measure against myself. My monitors sit patiently awaiting their return in the closet. Good backups. The mentality with trading is that it shouldn't be so complicated that you need all of the monitors. You should be able to trade from a laptop. And maybe a phone to have like a webinar or something going, you know, but like it shouldn't require a massive amount of tech to get a trade going, in my opinion. Keep it simple, stupid, or keep it stupid, simple, whatever it is. Longs are trying to piece back up. If we're looking at the S&P from the perspective of what's going on here, we've got this really nasty, choppy, sloppy, back and forth. Ugh. That's a technical term. Back here on this move up, and you know, I mean, where have we gone? We have a slight gap up. It hasn't really proven anything. Big engulfing bear bar to the downside with an inside bear bar, and the bulls trying to pierce higher. Yeah, I mean, I have a real immediate distrust of the longs right now, you know? So, I mean, longs have a shot, don't get me wrong, but man, I don't know. It's concerning. Gold, man, 56.8. Just by about 10 ticks. It's not like it came super close. All right, cool. It's all good. Thanks for the heads up. On a beach. Yeah, that's the dream. Hang out on a beach in Maui, just trading. The problem is that I have to move in my entire family for that to happen. I just can't convince my my lovely, beautiful wife to to just move. Vacation home, I guess, is next, right? Probably apartments. That way you don't have to, like, mow a lawn or whatever, or pay someone to mow a lawn. Condo, so you can rent it out, Airbnb style. Make that sucker an asset. Mm-hmm. We got bulls trying to come in on the S&P, still getting stuck at 4310. There's nothing happening on the S&P right now. NASDAQ's trying to pierce above the 14,558s. Huge amounts of volume trading up here. Got to creep that in a little bit so I can see it. Come on. Woo, now that's a bull bar. Yeah, if it goes to 1 cent, it's not a dream anymore, right? Exactly. What a ripper, speaking of. Where you at, Sheeb? Almost 1,600. Put in a high at 1,631. Ooh, oh man. That's a spicy meatball. Alright. S&P, I mean, really, the zone of interest after such a strong bull bar, I think they're trying to get the bulls in. I have, like I said, a natural distrust with this initial drive down. If we look at the responsiveness of this, it all happened down at 42.88. So the fact that the market's gone up, I don't really want to short in the face of that. There's too much happening right now to the upside. The bears have to take more control for me to trust them. And the same would go over here. Down to the low. Goes back at 14,440, which we are firmly above. So I've got to get some proof if the sellers are going to take it. Where do you get back in on Sheeb? So if traders are obviously going to be taking profit of these rallies, and I think any logical pullback right now is just looking at what's happening in the market. Let the market tell you when to get back in, right? If a normal pullback right now is 15 to 20%, that's a hell of a pullback. Jeez. On average, and these other narrower pullbacks are 12, 13%. I would say that really I wouldn't be interested until 1380 or potentially, I mean, really, if you wanted to ask me where are you interested, double this bad boy up. 19 and 19, give me a 38% pullback back down to 1,000. Now you're talking. Remember, if I'm buying in, not necessarily to hodl for the long time, but just to buy in, I want good price. Me need good price. Right now, I think if you're long, you just milk it, let it go, you know? I mean, for me, along with seemingly what sounds like a lot of people, taking profit into the rally makes sense. Get it? But realistically, you know, for me, and this is something that I talk about a lot, where, let's say, as an example, and nothing crazy is going on right now, right? If let me take a quick gander before I go into drawing mode here. How much time do we have left? We got 2 minutes? Tell you what, if the NASDAQ could get a pulse down to 38.75, that would be very interesting. On the S&P, I don't think they're going to have much below 10. Really. Maybe down to 8. Okay. So when... And again, this is something I talk about a lot, but when I'm looking at an area of interest, let's say as an example, we'll just use Shiba, but this could be Coca-Cola, this could be Tesla, it could be whatever it is, whatever investment, you know. You're looking at your initial entry price. And let's just say, to make math easy, this entry price costs you $1,000, right? Or $100, right? Whatever, $100. And you're looking to buy here. When the market goes up like Shiba did, I mean, remember, over the last 7 days, it's gone up 125%. Now, let's say that you got in a little bit late and exited a little bit early, and you'd still have like 60 to 80% right? So, I mean, if this market went up and you were able to catch an 80%, we'll cut it in the middle, 70% move, right? This thing went up 125, but 70%, when you get up to this point, what I'm looking to do is not exit everything, but look at the valuation, right? I have $170 worth of whatever at this point in time. So if I exit my initial $100, right? If I take $100 of profit, I have a $70 free position that I can let go forever. Think about that. Do that a couple times, and you can really start getting some stacks. This is more of a hodl strategy, obviously, because if it goes further down, then you just DCA in and buy more. But this is a longer-term type mentality where once it gets up to that point, you can exit your initial entry price even extra, right? You can exit $150 and leave $20 to go. That $20, if it goes up another 5 times, that's another $100. Yeah, I mean, and it's free. It's free real estate. 5 minutes until top of the hour, 10 o'clock. News at 10 o'clock as well. No pullback on the index markets, unfortunately. And down to a new low on gold. It missed me by about 10 ticks. At least that's not too much salt in the wound, I guess. Is NASDAQ going to be the only one that lets me play ball today? Look at gold. Yeah. It came like, I think 9 ticks away from the entry, dove back down to the lows. This thing's a mess. It makes sense, though. I mean, it's not like when you turn on the news, you hear happy things right now, especially. People need some shelter markets. Obviously, Shiba was one of them. But what's the most common one? Gold, right? Or even better yet, silver. Silver just never changes price. It's the most consistent store of value I've ever seen in my life. But here's the thing, like gold has always been kind of like the old adage with gold is usually if you can like a thing of gold, a bar of gold, should be able to buy you a really nice suit and a nice dinner. Maybe some shoes. Might have to go cheap on one of them, but you know, that's always been the thing. And if you were to take a bar of gold back when cowboys were around, you would have been able to buy a real nice suit, a real nice dinner, probably a horse or something. I mean, you know, values have changed a little bit, but still, it's always been a really consistent store of value. So what better shelter market that people are going to look for than gold and silver and all of that? Do you think the U.S. will run out of money? When did we have it? Aren't we in debt like $7 trillion? Or 20 trillion, or whatever the number is now? We haven't been in the positive. Nice little dip here on the NASDAQ for the bulls to try to get a pulse back to the upside. This is that dip underneath the previous bull bar where a lot of longs have been waiting patiently for any kind of value pullback to get their hands on. We do have news in about 2 minutes. Nice volume flush back to that POC, but I couldn't get that extra one off. Looking for the bulls to pulse this a little bit further up, back through the 70s, see if they can get it going a little further. Betting on copper with all those EV cars. Hey, I'm just saying, you know. Come on, NASDAQ, you can do it! Get back up to the 80s. That's the next major volume node. Oh, yeah. Upper 70s. We're at the 80s. Get through, get through, get through. Push, push, push. Pop through. Get through the 80s. If you can pop through the 80s, it's game time. Having a hard time. Nope, I'm out. Ooh, almost accidentally sold an extra one there. Thank you, hotkeys, for the cancel. Nice pulse. Yeah, just print more, all right? I mean, that's kind of my mentality, you know? Like, I know it's kind of a facetious thing to say, but, you know, do you think the U.S. is going to run out of money? When did we have it in the first place? Like, it's been gone, you know? I mean, we're really great at making debt and then making more debt out of more debt. That's something we're real great at. But when it comes time for people to cash in all at the same time, we're SOL. I mean, really, think about it. Like, if everyone went to the bank right this minute and cashed out everything they had, do you think the banks would have it? I don't. I mean, with any sizable withdrawal, you have to call ahead anyway. So, I mean, which is understandable. They're not going to keep it in store. But, you know, if everybody on the planet called into their, or in the U.S., called into their bank and said, hey, a week from now, I'm withdrawing everything that I have. I don't know if they would have that. I think we're just putting Band-Aids on a giant hole in a dam. But, hey, just print more. I mean, what else can we do but laugh at it, I guess, at this point. Anyway, we're going into 10 o'clock. The news isn't really doing a whole lot other than helping out the continuation to the upside. Nice follow-through. Do a couple more seconds here and we'll swap over into the extended session and then go from there. Yeah, as long as it's the, you know, the pound dollar, the euro dollar, as long as the dollar is on that side of things, you know, when it's the figurehead, if that ever changes, holy moly, it's Rome 2.0. Anyway, let's rotate over into 10 o'clock. We'll go into the extended session. For those of you who are ducking out in the morning, I hope you had a fantastic trading morning. It's been a really solid morning, all things considered. Nice little dips, some scalping opportunities. I mean, we did get some swing distances, but that wasn't the intention. That was just some icing on the cake. No real swing trades today. Everything's kind of in an awkward spot right now. We need a bit more room just to give us something to work with. Either way, if I miss any questions, feel free to drop those in the comments below, or if it's a more detailed one, you can always shoot me a message, jhb@ssftg.com. For those of you going into the extended session and everything else, just hang tight, and for the rest of you, enjoy, rest up, and we will see you all tomorrow, right? Have a good one. We'll talk to y'all later. Thanks. Bye. Right when I went to click it, my mouse died. There we go. All right. See ya.